Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, July 23rd. Firstly to the S&P 500, and here we see a continuation of the trend to the upside today, a candle making a higher high and a higher low, but on an indecisive spinning top type candle. But the important thing here is that the buyers have managed to take out the previous major high and establishing a new high at 1989. Completing that on an indecisive candle suggests that the buyers have lost a great deal of momentum, but we're not seeing any strength from the sellers. So there is an opportunity for the trend to change to the downside. Now, if the trend does change, we're looking to support at the Tenkan Sen, which is trading at 1972, and then support down at the Kijun Sen at 1961. We do have a bullish market in all three timeframes, supported by the Chica span, but the short-term dynamics are no longer favouring the buyers. If we're looking for a change of trend here, we would require confirmation with a candle making a lower high and a lower low. Now just looking here at the Fibonacci extension, and we're examining the relationship of the first time frame uptrend that the market's in at the moment to the previous time the market was trending up, and here we see this indecisiveness around the 100% level, suggesting a very strong probability for a change of trend to the downside. Now bearing in mind that if the market does break out up above that 100% level, the next target is the 161.8% at 2005, in line with there being some strong resistance roughly around that round number 2000. And just looking quickly at this potential type of ascending triangle that we've seen, and we've seen the market just close above the upper barrier, but really, to be honest, the close has been so weak, and it doesn't give us a lot of confidence in any move developing from here at the moment. What I'd like to see here is some decent bullish follow through to give us greater confidence in this breakout and the close above completing this ascending triangle. I suggest that we probably should watch the high of the this current candle, this major high 1989. If we see strong early bullish activity above there, we could see the market develop and reach the target based on the width of this pattern projected up from this area. Next, moving to the Dow Jones Industrial Average, the Dow 30, and here we see a very different trading day today. A day with a black body candle, and a day that didn't take out the previous high, so suggesting that there is some weakness in the buyers. So for the S&P we had indecisiveness, but here we've had a black body where the sellers have attempted to take control. They've found some downside momentum, which we can't say for the S&P 500, but this market is still bullish in all three timeframes, supported by the Chica span, and we will be looking to the Tenkan Sen at 17005 to hold a support if the market does come off. There's a good possibility of that occurring, but just looking at this candle as well, it's in bar chart terms an inside day, creates indecision about the market trending up, but also the fact that the sellers weren't strong enough to take out the low of this previous candle suggests that the sellers aren't too strong in this market as well, so we could see the buyers come back in and continue the trend back up on its way. Now next to the NASDAQ 100, and here's the strong market here. The gapping at the open here for two consecutive trading days suggests that the buyers are really very, very strong in this market compared to the S&P and the Dow 30, but we have a white body candle once again suggesting that the buyers are continually building momentum in net terms. It is something of a spinning top type candle, but the buyers have closed up towards the high, suggesting that they've closed with control once again. Now if this market does come off, we do have potential support firstly at the window that was opened up here, and that's a gap. It's the same as a gap in bar chart terms, and then down at the Tenkan Sen at 39.28, so some very solid support. But this market is trending up very, very strongly in this first and fast time frame, as evidenced by this sharp angle on the Tenkan Sen. Also the Kijun Sen is pointing up very sharply, highlighting the upside momentum. The question here is, has this market done too much all at once? Is this a rush of enthusiasm and then we get the letdown, we get the sell-off? If we do, bear in mind that we do have that support at the window and then at the Tenkan Sen fairly close by, down around the 39.28 level. And next to the Russell 2000, and here we see price action maintaining above the Ichimoku cloud and above the Tenkan-sen indicator, so suggesting that we still have a bullish market in that long-term and fast-term time frames. An indecisive spinning top type candle with a larger shadow on the top, highlighting rejection from the area around 1160, and the sellers taking control of this candle, suggesting there is a possibility of a change of trend here. Looking at the Kijun-sen, we are trading below it, so we have a bearish market in that medium-term time frame. It is pointing flat, and price action is being attracted back towards it. There is a very real possibility of a change of trend here. The Chica span here is within the corresponding price action, so not confirming any of the indicators and suggesting some neutrality in terms of momentum at the moment, and a market that's attempting to make its mind up. The danger here is that if the sellers do come in strongly and break through the Tenkan-sen support, then we could see the market testing down to the Ichimoku cloud, which is very thin at the moment, and the sellers, if they're strong enough, could change the sentiment in the longer term time frame. But what we'd want to see, if that does occur, if we have a close down below the Ichimoku cloud, we want to see some follow through and some continued bearish activity to the downside. But let's not preempt the market. At the moment the trend is up. We have a higher high and a higher low, but the short term dynamics aren't favouring that trend to the upside at the moment. Now let's take a look at the Dow on a relative strength basis to the S&P 500, and here we have the relative strength comparative, and you know that I like to use these one standard deviation Bollinger Bands on it to give me an idea of strength and outperformance. And here we see through all of this period from early July, mid-May, all the way down through to early July, we've seen the Dow strongly underperforming the S&P 500, all but for this very short period of time. About a week or so ago, the Dow outperformed the S&P 500. It really tells us that we shouldn't be looking to the Dow stocks to outperform the overall market. We should be looking to probably the S&P, or we'll have a look at the NASDAQ in a moment, but they were the ones that are outperforming the market. Here we see at the moment we have the relative strength comparative within the bands, suggesting neutrality, so no outperformance or underperformance. Next to the Russell 2000, and here we see very strong underperformance over the past couple of weeks, and we obviously know that from the charts, and the relative strength comparative can help us to find the stronger charts when we have strong trending markets all up above each of the Ichimoku indicators. Here it's obvious that this is an underperformer compared to the other markets, and decidedly so, with the relative strength comparative a long way down below that Bollinger Band. At the moment, it's the relative strength comparative is starting to move within the band, so we have some neutrality starting to develop, and that coincides with the market trading back up above the Tenkan-sen indicator. But here we have the strong outperformer, the NASDAQ 100, outperforming all of the equities markets in the US here since roughly about the 25th of June. The NASDAQ has been very, very strongly outperforming the S&P 500, so that's where we should be looking to our stocks to gain alpha or to outperform the overall market. One thing to watch here for is that volatility seems to be coming off, even though we've seen this great spurt here in the last couple of trading days. The buyers coming in very strongly, and the Ichimoku indicator is pointing up very sharply, and I'd say there's probably a little bit of lag in that volatility, and we could see volatility start to go up with in line with this uptrending price action, but still at the moment strongly outperforming the overall market. The question here is, has it done too much, and will we see some congestion or something of a pullback?